Welcome to the 76 Capital Leadership Series. My name is Wayne Kimmel, and I'm your host and managing partner of 76 Capital. And on this show, I interview top sports entrepreneurs, athletes, and executives all across the sports industry, the people that are truly shaping and changing the way the sports industry is looked at across the world. So, one of the things I want to just first, of course, give a big shout out to our producer back at the station, James Santour. James, doing a great job as usual, and follow James at James Santour on Twitter and all across social media. You can find me at Wayne Kimmel across social media, whether that's on Twitter, Facebook, LinkedIn, or Instagram. And you can, of course, if you're an entrepreneur and you're trying to do something that is looking to change the way people are thinking about, whether it's sports betting, esports, or the future of media, or just sports tech in general, please reach out to us at 76 Capital. We would love to get to know you and see if there are ways that we can help each other and potentially partner and do some amazing things within the sports industry. But let's get right to it. We have a great guest today. We have the co-founder and CIO of Roundhill. His name is Tim Maloney, and Tim can be found all over Twitter and across the internet at Maloney's Sandwich. We got to talk to them how we got that name. But Tim, welcome to our 76 Capital Leadership Series.
Thank you. No, happy to be here, Wayne. I'm excited to chat. And I kind of went with the fun Twitter name, and I'm sticking with it. So jury's out on good idea, bad idea, but we're going to go with it.
Well, absolutely, Tim. And we're excited to have you on our 76 Capital Leadership Series, because what you are doing at Roundhill, I personally believe is so smart and such a ground, breaking way for people to think about how they invest their money in the stock market via the types of ETFs, the exchange traded funds that you and your partners do over at Roundhill. And I'm excited to get into that. But before we do that, what we do on our 76 Capital Leadership Series is really to hear the backstory. Who is Tim Maloney? Who is Maloney's Sandwich? How does this all come about? And how did you get to where you are today?
Yeah, sure. I mean, you said in the intro that you have athletes on, so I'm going to put myself in that category for the time being. No, just kidding. So my background, I grew up actually on the East Coast in New York, New York City. Grew up playing sports and have always kind of stuck with that. Also playing video games, which we'll get to a little bit when we get to the esports topic. Went to Vanderbilt undergrad, came out and worked in financial services for a few years, kind of on both the buy and sell side, as it were, of the asset management industry, and ultimately saw an opportunity that we're trying to capitalize here on at Roundhill, where we didn't really think the investment management industry was reaching a specific audience as well as they could, and we decided that we would go out and find a way to reach them better. That audience skews younger, but every time I say that, I realize it can come off the wrong way. We think our kind of business model and our products are for everyone, for all ages. We really just try to approach the industry differently. And I think that's something we hope to continue to do. And hopefully we're providing a good, valuable service. So I may have glossed over some key parts of my history and my story, if you want to expand on any, but that's the 30,000 foot.
Yeah, well, definitely, Tim. I mean, you mentioned you grew up in New York. Were there certain sports that you played growing up?
Yeah, so the two that I played the most were hockey and lacrosse. Believe it or not, hockey in New York City is something you can do. So those were my sort of two favorite sports growing up. I don't play either much nowadays, mostly because I'm afraid of tearing an ACL at 32 and being sidelined, but those were the two that I was closest to.
Did you play at Chelsea Piers at all? Is that where people play ice hockey?
I did. I was a member of the New York City Cyclones out of Chelsea Piers, so over at the Sky Rink. Good times.
That's awesome. That's awesome. And so you went to Vanderbilt, and the one thing every time I think of Vanderbilt, I always think of the basketball court there, and how the benches are on the end lines. What was it like being a student at Vanderbilt? And I mean, the sports programs are really starting to come up these days.
Yeah, I mean, I loved it. I loved having kind of the SEC sports there. I mean, I think anyone who's followed the SEC knows that Vanderbilt has to punch above its weight to have any kind of success, and they've been able to do so in some sports, baseball in particular. Basketball, they've had their runs. Football is I mean, SEC football is a pretty serious game. But it was for me coming from the north and heading down there for 5 years, which we can get into. I had a great experience kind of being a part of that kind of football, basketball culture.
Well, do you think, you mentioned that, and so you have a co-founder at Roundhill, Will Hershey.
Mm-hmm.
How did you and Will connect?
Yeah, so we went to Vanderbilt together, believe it or not, but we met in kindergarten, so we go way, way back. We went to the same elementary school. We then both switched schools for high school, but to the same school, so two different schools, and then went to Vanderbilt. So for better or for worse, Will and I have known each other since we were like 3 and went to school together for 17 years, 18 years. So we go way back, and stayed in touch, and ultimately both were working in the investment world and said, this is an opportunity that we can't let pass us. So we decided to start the business.
So, you and, I'd love to, get into it here, right? I mean, so you and Will, we're in the investment trading world. You saw what was going on. You felt like you could do it better. And, tell us the story of how you created Roundhill.
Sure. So as we've kind of matured the business here, I guess that's all relative, but I've become more comfortable giving like the full friends and family story because it ties to crypto. We are not a crypto company, but I think it's an important insight that we drew. Was in 2017, we were looking at what was happening in crypto, Bitcoin, and kind of the other altcoins, if you will. And what we saw was there was a lot of a deep, in-depth conversation taking place about all these cryptocurrencies, right? And it was taking place on Twitter and on Reddit and on other forums like Telegram and Discord. And it wasn't that there was a Goldman Sachs driving the conversation and putting out research necessarily. It was all kind of community driven. And we said, these same people that are investing in these alternative assets, if you will, they would, we thought, invest in things like exchange traded funds if we made exchange traded funds that they wanted, and then met them where they were from a research point of view and from a content point of view, and kind of made our focus finding them or having them find us. So that was kind of the idea that sparked it. We kind of early 2018, we were discussing it, and then ultimately we both left our respective roles kind of later in 2018 to start the business. And we started with an ETF focused on esports and digital entertainment under the ticker NERD. And we have since expanded the suite from there. We're up to 5, and we have a few others that we're hoping to launch, but not yet kind of out there. So,
well, I mean, I love what you said, and it's really great to have you, Tim, on our 76 Capital Leadership Series. Again, follow Tim Maloney at Maloney Sandwich on Twitter. He and his partner Will have done some really, really interesting things. They've, as you just mentioned, you've created 5 ETFs. First, NERD for an esports perspective. I want to get into that a little more. Bets with sports betting. You have a streaming. You have a professional sports ETF, as well as an undervalued stocks ETF as well. So 5 ETFs that Roundhill has created. Going back to your, I think the first one was NERD, correct?
Mm-hmm. Yep.
So NERD, you decide to put together a basket of stocks in your ETF around esports. Why did you do that, and what did you see in the market that told you that this was going to be a really interesting opportunity?
Yeah, great question. So I think within the esports and digital entertainment opportunity, and generally when we look at product construction, we ultimately know that we're going to own companies that are more or less exposed to the theme in question. The goal is to own more of the companies that are most exposed. And I think that's important with something like esports to note, because going back to when we launched it, but even now, there aren't a ton of what you would call pure esports companies that are publicly traded. There are some. And then there are other companies that may have other business lines that kind of overlap or that are different from their esports and their kind of broader video game offering. And we need to, when we're making a product, we need to kind of account for all of that. But the idea really was, let's find a theme that does kind of 3 things. One, that we're interested in. So, I'm a gamer. I'm not very good, and please don't ask me to do this next time on like Call of Duty or anything, 'cause I'm terrible. But I'm a gamer. I saw what was happening within the gaming industry, and we thought it was an opportunity that people would be interested in investing in. So that was kind of one, something that we cared about. Second was we wanted something that the broader investment world seems to be undervaluing, right? So if you think about the investment world, you think about people in suits and ties probably laughing about gaming and saying like, why would you watch someone play video games when you can play them yourselves, right? That's the most commonly heard argument against esports, and it drives me a little bit crazy. So with those two things, the third thing is we wanted something we could tell a story around. So once we had our own personal interest, something that Wall Street wasn't doing, or at least not doing as well as we thought could be done, and something that would appeal to this audience that we thought was being underserved, that was kind of the this is an idea, this is an opportunity, let's get it out there. And the plan was always to kind of build on top of that with additional products that kind of fit that mold.
Well, so how does a company, create an ETF? Like, it just seems like, you're a gamer, you understand the esports industry, you recognize the fact that it's not weird that people watch other people play video games on Twitch and go to, pre-COVID, large arenas and thousands of people come to watch other people play video games against each other. What's the difference with that as to going to an arena and thousands of people watching someone play hockey or basketball? The answer is, to guys like you and me, it's the same, right? So, how did you actually do it? Like, how do you create an ETF? I mean, is it a really hard regulatory process to do that, or was it kind of pretty simple?
I would say it's simple but challenging. So what you have to do is you have to become a registered investment advisor with the SEC. Then you need to file a prospectus with the regulators. They then take some time to review it, and then kind of concurrent or beforehand, you have to line up a number of service providers to do things like fund administration, accounting, custody, and things like that. So it's a bit of a process. Once you figure it out, it's you can replicate it, which is what we've been doing here. But there's quite a bit of regulatory oversight being registered with the SEC, and I think that's a whole nother topic that I don't want to kind of bore the viewers with too much here. So once you're set up, it's not terribly challenging to kind of replicate the actual kind of the more mechanical side of it. I think the more interesting piece that in my mind, is actually creating funds that make sense, right? So I mentioned it a little bit, but we try and, when we set up a fund, we want to make sure that we're owning companies that are more purely exposed than other companies with a higher weight. So one thing that often happens with ETFs is they'll weight a company higher just because it has larger market cap. So bigger companies get more weight. For something like thematic investing, that doesn't make a ton of sense to me, right? You're not going to own Amazon as like a 10% weight or an 8% weight in a video game fund just because they have Twitch and they have a few other properties in gaming, right? Because Amazon's real business drivers are web services and e-commerce, right? So we think about it, that's how we start when we think about it from like a first principles point of view. And then from there, we try and construct a fund that, we want people to look at the holdings, which are available every day, and say, this makes a ton of sense. There were enough companies I expected to see, and then there's enough companies I haven't heard of, but when I look at, like, they've done the hard work for us and found these companies that make sense. And that's the value we provide that we charge a fee for, right? So.
Well, I think it's really smart the way that you go about putting together your groups of companies under each specific area. I mean, with nerd, with esports, with on bets, with sports betting, and how you bring those companies together. Is it something that, how do you kind of get it out to the world and let people know, and how do you market each of your funds, and how do people find out about what you're doing? And I think that, I certainly am a subscriber to your newsletter. I really look, and see what you guys put out there. I love the different charts that you have. How do you let the average investor out there today, to find out about what you're doing?
Sure. Thank you. And I think before I get into the marketing, it's important to note that none of this works if your funds are not good. So I think people There's an assumption sometimes that people don't look at what's in ETFs, they just buy them. Maybe that's true in some cases, but we believe that if you don't have a good product, you're not going to get off the starting block. But from a marketing point of view, this is, I think, the insight that we had and are trying to kind of build a business based on. So within the ETF world, typically what happens is you actually have people picking up the phone and calling financial advisors and other institutions to say, hey, you should buy this fund instead of these other funds that you might be trading for a similar purpose. So it looks a lot like the mutual fund model, and it's kind of a legacy business model. We said, forget that. We don't really want to play that game because we're not going to beat the players who are good at it. Let's instead lead with content. Let's lead with content on Twitter. We have a website where we post blogs. We have company pages that give kind of a few bullets on each company that we have. Not all of them are done yet, but on the companies in our portfolios. Let's use Twitter. Let's have this email newsletter. And the goal was really to get our brand in front of as many people as we can, and trust that if they find us and they find our content and they appreciate it, that they'll figure out we have these ETFs and they'll buy them if they're interested, right? So that's the idea. It's not to sell the ETF so much as to have people buy them.
Well, I think it's a really smart way of looking at it. I mean, if you create the value, then people will come, right? Instead of you going out and selling it. But I think what you've done a nice job of is to share with people, what's in Nerd, what's in bets, right? So let's take bets as an example. I mean, certainly for us at 76 Capital, we're big investors in the startup world, right? From an esports and sports betting perspective. But with what you guys do is, in these baskets of companies inside of each of your exchange traded funds, they're the public companies that are in there.
Yep.
But just like we at 76 Capital, we pick the entrepreneurs, we pick the companies to invest in. How do you kind of pick the ones that are in let's just talk about sports betting and why you pick some of the players and why they're in that ETF?
Yep. So for each fund, it's going to be a little bit different, but it's again going to come from the same concept of we want more of a weight in companies that are more purely exposed to the theme we're going after, right? So just as like a relatively binary example, if you look at something like Penn versus something like at the kind of broader casino end of the spectrum, like an MGM or something like that, we're going to want more exposure to the Penn because, yeah, sure, they have the in-person experience as a part of their business, but with the Barstool relationship, really they're making this material push into the sports betting and the online side of things that we're focused on. So the full fund is sports betting and iGaming. So from a principles point of view, that's how we think about it. Now, within a given theme, there's going to be different categories, right? So within sports betting, there's the kind of pure sports books. There's companies that are more focused on iGaming, but have a sports book component. There's technology companies that kind of play in the middle that maybe the brands, it's not brand name to the average sports book user, but you do a little digging and it starts to make a ton of sense. And then there's also these, like I referenced, kind of these larger diversified gaming, quote unquote, companies, you might call them, that they have the kind of hotel and in-person experience business as a big piece of it, but they do have some exposure as well to kind of sports betting and iGaming more broadly. So that's how we think about it. It's going to look different for every fund and every theme. But the goal is really, take the theme, maybe break it down into some sub-themes that make a lot of sense, and then try and give the most weight to the companies that are most purely exposed to what we're looking at.
Well, I think it's really exciting what you do and how you bring these companies together. And certainly here at 76 Capital, we love to see, DraftKings is one of your holdings in bets, and DraftKings just bought our portfolio company, VSiN. We're excited about that, deal, as well as Victory was acquired by Fubo TV, another player that's, I believe, is in your streaming, ETF, and maybe you have a little bit of it in the bets. I'm not sure, but it's really interesting to sort of see how you do that and how you moving companies around in and around that. And it's something that you've certainly hit on some of the really big emerging trends in the U.S., whether that's esports and sports betting and streaming and just the growth of professional sports. And I wonder if I think I know the answer to this question, but with what you guys are doing at Roundhill and what we do at 76 Capital, part of it all comes down to the fact is that we believe over the next 10 years, one of the biggest industries in all of North America will be the sports industry. And whether that's across esports, sports betting, and all the other pieces across this, that's the future. And from what I see, what you're doing on a public perspective, when you're putting these groups of companies together from a public perspective, it seems to me that you have a similar belief.
Yeah, I think so. I mean, it's definitely implicit in the products that we've selected. Like I said, the marketing strategy and everything else doesn't really work if you don't have a good product. And part of having a good product is picking a theme that you expect to grow, right? Because you're asking people to make a bet on whatever industry you've created a product for, right? I agree. I think the broader kind of, I guess, media, for lack of media and entertainment landscape is evolving. I think you've seen, if you look at sports betting as an example, you've seen a number of really interesting deals where sports media companies are tying themselves up with sports betting companies. Reading between the lines, why is that happening? Well, maybe an integration with sports betting is a really nice way to further serve your customers as well and make a better experience, but also to monetize, which is, let's be honest, these companies are all in the business of making money and they need to continue to monetize. And I think sometimes the more traditional old ways of monetizing a sports property, it's evolving. Let's just put it that way, right? So yeah, implicit in the themes we select is that we believe they're investment opportunities that are worth considering at the very least. I try not to be too overpromissory with this stuff. And I think also implicit, frankly, is the fact that they're interesting, right? To myself, to Will, to the rest of the Roundhill team. It'd be a little hard to get behind and create a product that, maybe it's interesting to some people, but if it doesn't fit what we're looking at, it's a force. And frankly, I think people pick up on that. And last thing you want is to be disingenuous, especially with some of the audiences we're looking at, right? Like the video game industry and the people who love gaming, like they'll call you if you're not if you're off, they'll call you, and it's the last thing you need. So we try to pick things we know and like.
Well, there's no doubt, no matter what you do, you better be authentic, and especially in the video game world, they'll sniff you out from miles away, and they'll call you out.
Yep. They will, and you'll notice as we start at work, if you look back at our communications, we made a conscious effort to make sure we weren't over representing ourselves, right? Like I didn't come from the esports world, neither did Will. We weren't trying to say we did, but we've been following gaming, and we're excited about the opportunity, and we want to give the esports community the ability to sort of invest alongside, because most people, and this is a separate topic that maybe we get into, but most people can't invest in private companies. There's a lot of rules here in the US. Probably came from a good place, but whether or not they're effective is another conversation. But ETFs are something everyone can kind of invest in for the most part. So,
well, let's expand upon that. I mean, it was something I definitely wanted to talk about. I mean, certainly from what we do at 76 Capital, when on the private side, when we invest in companies that are startups, is you have to have for the most part, be an accredited investor. There's a process. There's a lot of paperwork for us to bring in investors to invest with us. Our goal in many cases is to build those very young companies, so someday they can be part of a Roundhill ETF. Fortunately, as I said before, we now have companies like VEASAN and Victory, which are now part of companies that you are part of, two of your holdings that you have in DraftKings and Fubo TV today. But it's not something that the average investor can invest in. But what you have, they can. So maybe talk a little bit about that.
Yeah, so that was part of the goal, right? I think when you think about coming back to esports, going back to our first product, you think about investing in esports, the opportunities that are most obvious are private, right? It's investing in the teams, which are private. Sure, you could make the leap that investing in the publishers behind some of the big titles is a way to do it, and that's what we've done with the fund. But it's just your options are a little bit more limited if you can't invest in private assets, which is what most of us fall under that category. My hope is that that's going to continue to change a little bit and kind of democratize access. But in the meantime, I think what we try to offer is a really compelling way to get exposure to the theme, if not in the same structure in terms of being private investments, but exposure to the themes people are interested in that are otherwise hard to get that exposure to, if that makes sense. And then we offer it in a diversified way and something that's liquid. You can trade in and out of it every day if you want to. And that's kind of the goal. So I think that's kind of where you were going with that one. But
Yeah, no, definitely, it definitely is. I mean, in the past, look, I was an investor at the very beginning of Indiegogo, so we totally understand what you're trying to do. Truly believe in this idea of being able to democratize the opportunities really for everyone to be able to invest in what they want when they want, and you're doing that at a really great level within these emerging areas in and around sports and media, at the on the public scale. So we're excited to have Tim Maloney here on our 76 Capital Leadership Series. Maloney Sandwich is what you want to follow to see, follow all the things that Tim talks about on Twitter, with regards to the different ETFs that they have in these emerging sports entertainment areas. And they're doing some great things. And Tim, I have to ask you about the world of SPACs today, right? I mean, you have over 100 publicly traded SPACs in sports and entertainment. There's way more outside of that. But one of the things that we believe at 76 Capital is that it's a great thing that there are a lot of these SPACs that are now looking for potential target companies to then de-SPAC with them, and then be a fully fledged public company like a DraftKings, like a Fubo TV. I mean, these are businesses that have, and many, and some of the other holdings I know across your ETFs were once SPACs, and now they're de-SPACed and gone off, and now they're doing the next part of their life, and so how do you feel about all these SPACs that have been created, and how do you think that helps you, and or how do you think it impacts you at all, at Roundhill?
Yeah, sure. I mean, from a Roundhill perspective, we will look at a SPAC, in pretty early stages, I think, compared to our peers, for whether or not it makes sense to be in one of our ETFs. So I think in that sense, it's helpful to us. We're, I don't want to say less conservative, because we're certainly doing our diligence, but we're not going to wait 6 months to put a name in if it makes sense, right? But I think in general, when we talk about SPACs, I think of SPACs as symptoms, the wrong word, because I don't think they're a bad thing, but they're really emblematic of a broader problem, which is the IPO process kind of stinks for most parties involved. I think it's really good for the bankers and their institutional clients who get in at IPO price. We talk a lot about like the IPO pop, where things go and they trade up 100% in the first day. If you think about what's actually happening there, who's benefiting? It's banks benefit from getting to do the deal. Forget that. The buyers who buy at IPO are really the ones who benefit the most, and those are typically large clients of banks, right? And then the people who are losing are really the shareholders from the business when it was private. In a lot of cases, that's the team itself, who are basically getting diluted at a valuation that's 50% of what the public markets are going to treat it as. So I think in a lot of ways, SPACs are becoming more and more popular because they offer another way to take a company public than the IPO process, which in my opinion has a number of faults that need to be fixed. And the more options these companies have, the more competitive each option has to become over time, and it'll ultimately be better for consumers, for early employees of startups, and really for everyone except for the two parties I mentioned out of the gate. So I think progress on that front is important. I think there's going to be some more progress in the coming years. It's been kind of rumored that a company like Robinhood may direct to their customer their IPO, which would be really cool if they figure it out. I'll be watching that closely. But look, if you're investing in SPACs, do your homework. A lot of SPACs are going to have bad returns, and a lot of SPACs have good returns, just like any other investment. So do your homework, but as a tool for companies to go public, I think it's a great thing that's being used more.
Yeah, absolutely. Well, going back to some of some of your other products at Roundhill, Tim. I mean, you have your streaming ETF, which is Subs, I guess, SUBZ, and MVP, which is is that your newest one?
Yeah, that's the newest one from about 2 weeks out now. Focused on kind of pro sports teams and leagues, sports media, and sports apparel. It's kind of the subcategories there.
So let's talk about MVP a little bit. I mean, what kind of made you and will decide to create MVP? What was kind of happening? It's happening that's making you want to do this.
Yeah, I mean, I think there's kind of two main pieces to this. The first is if you look at the kind of Forbes valuation for pro sports teams, which I know most of them are not public and it's not perfect science, but it's a pretty clear trend there. They've increased in value at a nice rate, and I think I have sort of an expectation that that continues to some extent. But I think the second one is when you think about what is investing in a sports team. Well, previously, it was basically something you did if you were a billionaire or a several hundred millionaire, where you buy a team, right? And that's cool if you have that much money, but most people don't. So we thought, wouldn't it be cool if we put together a basket that has all of the teams that are publicly traded and gave people the ability to invest kind of a little bit like these 100 millionaires and billionaires, where they're owning a stake in teams, but in public markets in a diversified way. So a little bit of a mix. I mean, I think I expect, to your earlier point about the sports ecosystem, I do expect it to continue to grow. I think the teams will benefit from that. I think that's kind of the investment thesis behind it. But we think about our audience and what we're trying to do for them. I think this is a really cool product, and one that I've kind of wanted for a while. I'm a big Rangers fan, so obviously I could have owned just MSG there, but like it's cool to get the diversified exposure, I think.
Well, it's really cool. I mean, MSG, from and all the teams, whether that's the Rangers or the Knicks, and then you have Liberty Media and Juventus and Manchester United, and the list goes on. I mean, and included in that, I see Nike and WWE. I mean, it's a really interesting way to have some of your favorite teams and brands all together in and just by buying MVP.
Yeah, I think so. And I think one of the other benefits broadly of the ETF structure is that if you're a US based investor, you can't buy Juventus. It's traded in Italy. You can't buy it. And that's true for a lot of the names across our fund. So we buy them for you, and then you can buy it in the US listed ETF. And that's once again an advantage, right? So if you're a US investor and you want to invest in these foreign companies, it's a good way to do it. But yeah, I think it's really cool fun. We were really excited when we started putting it together. And I think, frankly, the biggest roadblock at first was we weren't sure there were enough. Like, you have to kind of do some diligence, figure out what you can put in a basket like this. But there are, and I think my gut is there's going to be more and more of this, whether it's these individual holders selling a piece to a private equity firm, like we saw last week with the Warriors, or going public in some way, shape, or form. I kind of expect to continue to see that. So,
well, Tim, I have to ask you. It's only been a few years since you and Will have been running Roundhill. But what's been your most exciting thing that you've done so far, and what are you the most proud of at this point?
I think individual event, it was really cool ringing the bell at the New York Stock Exchange for Nerd. The funds we've launched since, we haven't been able to have in-person bell ringings because of COVID. So that was just a really cool experience that not everyone gets to have. Hopefully someday we're doing it for the company itself, not just an ETF. But that's a whole separate story. I think for me, and maybe hopefully this is helpful to your viewers, I think the coolest thing has been proving that it can be done. I think when you go to start a business, a lot of people say, well, if this was a good idea, then XYZ would be doing it. And the reality is good businesses are started all the time and it's hard, but you start a business and you build something of value, and it's a really cool experience. I think the risk associated with entrepreneurship gets overblown. It's not to say it's not risky, and everyone has different circumstances. I get it, but you learn so much doing it that if Roundhill wasn't working, I would envision myself as a much better potential hire for any number of companies than I would have been otherwise. So I don't know. I think taking something from 0 to 1 and seeing it grow, and seeing the support from the community, and really, like, obviously this isn't just Will and I that built it. Like it's the other people we work with, but it's also the other employees we have on the team. It's the community that talks about our funds on Twitter and on Reddit and all that. Like all of that contributes, and it's just been really cool to see.
Well, certainly, and congratulations so far. I mean, I'd love to hear, where do you think, you say, you're at sort of at one, kind of that first step, let's say, right? In a couple of years from now, we're sitting down here, and well, hopefully Tim, you, me, and Will, and are sitting somewhere in person and having this conversation. But in a couple of years from now, where do you see things going? Where would you love Roundhill to be?
Yeah, I think again, it comes back to who's this audience we're trying to build products for. So continuing to expand that audience and offer them other products potentially beyond what we do in the ETFs. That's really where the opportunity is, in my opinion. I think this audience is going to keep growing. I think they're going to grow in percentage of investors as well as in percentage of assets over time. So really just continuing to serve them. A few things we have in mind. Our thematic ETFs, they kind of, in our opinion, they take a step from the Peter Lynch style of invest in what you know, and they make it invest in what you know, but like more than one company at a time. What I'd like to do is move towards invest in who you know in a way. So I think there's a lot of smart people out there who cover interesting topics or subtopics, and they have a material following for that. I think that could be turned into an ETF in a way that's really interesting and that kind of hasn't been done. So hopefully no one listening tries to copy that. We're also building an app called the Stonks app. It's meant to be like a social investing community. That's another way we think we can serve that audience. And hopefully we'll have more and more ideas as we go, and continue to stay entrepreneurial and build cool stuff for the people who helped us get to where we are.
Well, look, I as we start to wind down here on our 76 Capital Leadership Series, first of all, I want to thank you for joining us. And I love how entrepreneurial you and Will have been in the overall sports and entertainment industry. The light that you guys are shining on the overall industry from a public stocks perspective is tremendous. It's so helpful to the entrepreneurs like you, but who are out there building companies that someday hope to be part of your entrepreneurial, world at Roundhill. So it means a lot. When you see Nerd comes out as an ETF, and then Bets, and then Subs, and MVP, and it's exciting. It's really exciting for the entrepreneurs and the investors like us on the private side, seeing what you're doing on the public side. So again, just want to thank you and congratulate you guys for what you've been able to do so far. Love your thoughts about what's going to happen next. And are there any other things you want to share with our audience before we wrap up here on our leadership series?
No. I think first of all, thank you for your kind words and for having me on. We've been in touch a little while, and I think we're playing into a lot of similar kind of ponds, as it were, or lakes, oceans, whatever you want to call it. And I think it's always good to cross paths with people who think about similar things in similar ways. So thanks for having me on. I think I got most of what I probably wanted to say out there. I think the last thing I'd add is we are a very open ecosystem here at Roundhill. We love getting feedback. We love having conversations with people on Twitter and elsewhere. And that's kind of what we want, right? Is to have a conversation going. So to the extent that we can reply, there are some rules. If someone posts about an ETF, we can't reply directly. It drives me a little bit crazy, but reach out if you have any questions. You know how to find us. We are very much an open. We want that. So don't be strangers.
Well, I love that. I love the openness. I love what you're trying to, what you're doing. I love what you're building. I love that you're going after this incredibly exciting, emerging sports and entertainment world. I call it emerging, but it's $1 trillion industry, right? That's just growing and growing and growing. And you're shining a huge light on it, and that spotlight it's amazing. So, it's awesome to have Tim Maloney on our 76 Capital Leadership Series. Again, make sure you follow Tim at Maloney Sandwich on Twitter. And remember, if you're an entrepreneur, if you're a student, if you're a business person, and you just want to work in the sports business world, whether it's sports betting, esports, sports tech, or sports media industry, reach out to us at 76 Capital. Reach out to Tim at Maloney Sandwich. And we'd all love to connect with you. So once again, I'm Wayne Kimmel. Thanks for tuning in for this edition of our 76 Capital Leadership Series. Tim, thanks so much for joining us.
Thanks for having me.
Absolutely. So get out there and go make it happen, everybody.